What's up guys, and welcome to another episode of Drive to Thrive. In today's video, I want to bring you guys' attention to PayPal because I think we are down into this really nice attractive area. So we'll be going over to some charts, looking at some margins here, and I'll be giving you my bullish thesis as to why I think PayPal is a good investment. Now, as always, this isn't any kind of financial advice because after all, you shouldn't be listening to any YouTubers out there, but take this as more or less a constructive video where I kind of point out my bullish thesis, and if you think that I'm wrong or if you'd like to leave me a comment, by all means do so because I'd love to hear from you guys. Now, otherwise, let's get started and let's go over to my computer. Alright guys, so starting off on our weekly chart of PayPal, you can see that we've pretty much given up all the gains back. We're back into these levels that we have been in March of 2020 and going as far back as 2018. So you're pretty much picking up shares of PayPal at what you could get them 5 years ago, which to me is attractive because I do think that their company, their financials and everything has gotten better, and so PayPal to me is a nice long-term opportunity. Now looking at this weekly chart, since those all-time highs down to where we currently are sitting, we're down about 72%, which is a nice opportunity like I mentioned. So let's take a look at this green zone that I have highlighted, which is sitting around that $80 and $70 US. Now, as you can see, lots of support, lots of buyers coming in at these zones here. So back in June, July here, we ended up bouncing off of here. Just as recently as October, we ended up bouncing off of here, going back to December of 2018 and as far back as November 2017, lots of support off of this area. So this is why I like this mid $70 range as a nice accumulation zone. Now, if we zoom out of here and let's take a look at some MACDs and stochastics on all of that. So staying on that weekly chart, our MACD has rotated off of those extreme lows. We are starting to speed up towards this zero line, just as recent. You know, we tried to cross over, but hey, look at this, getting a little bit of a bounce. So still bullish momentum to the upside. However, the MACD is below the zero line. So overall, it is signaling a little bit of a bearishness in the midterm here. Our stochastic RSI is kind of in this middle, so no man's zone, like I like to call it, but it is rotating towards that overbought territory, so some room up there. Now, if we go over to our daily chart, we can see, so this is that shorter time frame. This is where you can maybe try to do some swing trading and stuff like that, but that MACD is kind of flat, indecisive if it wants to cross over to the upside or to the downside, and the stochastic RSI is in this overbought territory. So look for this to pull back and again possibly present us with another buying opportunity down around these low 70s. Now, going over to the monthly chart here, this is where we can see that MACD losing its momentum to the downside finally, overextended. Now, as with any kind of other video that I mentioned, you know, anytime you see this overextension, whether to the upside or the downside, look for that rotation, right, to this middle line, to this zero line. So that's what I'm expecting. And that stochastic RSI, again, in this deep oversold territory, looking to go back up. So this presents me with a nice buying opportunity, and this is why I'm sharing this with you guys. Now, as always, don't take anything, you know, that I say as God's word, because I could be completely wrong and we could be selling off down into my next support around that $44, $45. So if things really turn ugly and we get another leg lower in the stock market, nothing is for certain. Doesn't mean that because we're sitting at around this $70 and we have been getting bought up in this area that this is the ultimate bottom. There could be even more pain ahead of us, especially if the market ends up selling even lower, if there's more liquidity crisis, if people panic and they start selling everything off. Look for that $45 in the worst case scenario. Now, for the upside with this stock here, I definitely think we could be seeing $123, $120 in the short term. A very realistic target. We have been back here in 2019. this is where our next resistance is going to be. Now, if things look good and we start moving from here, maybe let's go over to that daily chart and I'll show you what I see from here. So zooming out of here, now if we end up breaking this $123, well, guess what? We got this nice juicy gap here sitting around that $160 and $140. As with any other gap play, I do think this will get eventually filled up. Might take 6 months, might take 6 years. I don't know when it's going to happen, but I do think it will get filled up at some point. So this would be our next target right here, is around that $160, $140. Then we got another resistance here sitting at about that $180. Now, if we clear that, then we got another gap right here sitting at around that $226 to $214. Again, same scenario, you know, look for those gap plays. So ultimately, I think there's lots of upside, you know, into this stock. Now, PayPal is like #2 most downloaded app when it comes to transferring money. It's used all over the world. People know it. The business is good. The margins are good, which we will be taking a look at here shortly. And they also own a Venmo, which is a #3 used cash app out there. So overall, I think the business is solid. The company is solid and has lots of upside. It's just been beaten down just like anything else. So for those upsides, you know, take a look, take a screenshot of this charts right here or refer back to it in the future. But these are some of my price targets, you know, to the upside. Now, like I mentioned, let's go over and let's take a look at some of these margins. So what I like to do is go over to investing.com, super quick exercise everybody should be doing with all of their stocks, and take a look at these margins. So going over to PayPal, you can see that their gross margins, their operating margins, net profit margins are all positive, and that's what you want to see with a good long-term company. Return on investment, 10%. Now, if we take a look at their balance sheet, so their latest is total assets, 76.4 billion, liabilities of around 56.1 billion. That brings us to debt to equity of 56%. So just about the 50%. I try to look for companies that are around that 50%, no more than 70%. You know, now you're starting to push it. And operating cash flow, again, positive operating cash flow. So that's a check, check, check. And this is why I think PayPal is a nice, good long-term opportunity. Now, as always, let me know in those comments below. What do you think about PayPal? What do you think about their business model? Is this company going to be a winner on the long term? Or do you think I'm just crazy and this company is going to So let me know. I'd love to hear from you guys. I hope you enjoyed this video. If you did, do me a big favor and smash that like button, as I'm trying to figure out this algorithm and get my videos promoted out there into this YouTube universe. Now, that'd be greatly appreciated. Otherwise, have an awesome week and see you in another video. Cheers.